Hey Daniel, thanks for coming and joining Savings.com.au. We understand it's a pretty big coup to get a CEO of a lender, especially a new one on. I imagine you're pretty busy getting Unloan up and running. So can you tell me just in the past few months, how's all that been?
It's been great, Harrison. And look, thank you for having us on the show. We've had a fast start. Obviously, Unloan's been quite an exciting proposition to hit the market, especially while people are looking at their home loans and their options. Obviously, we're online applications completed in as little as 10 minutes and a very good offer for those who are looking to refinance their home loan.
For sure. Have you noticed anything anecdotally about where these people refinancing are coming from? So are they coming from major lenders, other major players in the market?
Look, it's pretty well represented across the whole market. Certainly the majors, also the tier twos, also some other digital lenders are coming across to Unloan. We're very grateful that customers are obviously trusting Unloan to provide them with not just a better product, but a trusted brand. Obviously, we're built by Commonwealth Bank, so we've got a fantastic brand name behind us. And I think many customers are also enjoying how fast and easy it is to get an Unloan.
Mm-hmm, for sure. And now maybe a bit of a tougher one now that Unloan offers only variable, but I've noticed anecdotally lately that some lenders are actually decreasing fixed rates while their variable rates are being pushed up. Can you perhaps explain why that's happening?
Look, a lot of lenders are obviously looking to capture some market share for the duration of the next few years. So fixed rates allow most lenders to predict they're going to hold that customer for the duration of fixed rates, given the expensive break fees in refinancing within that period. And in turn, obviously, the offer is there in some quarters to entice customers to choose fixed rate. Having said that, the fixed rates now are generally much higher than the variable rates, so you have to make that trade-off as a customer, whether you're prepared to pay a much higher rate now on a fixed and albeit at a fixed level, or knowing that variable rates are going up, still take the savings on offer right now at variables, despite the ongoing rises, which you do expect over the next few months, and take the decision to bank the savings now.
For sure. And so segueing into that, you spoke about rates rising generally. Where do you reckon that will stop? Is there a ceiling for RBA rate rises? And what do you see happening in the next sort of 12 months or so?
All the lenders, there's a spread of economic predictions, and they are all predictions about where we think the interest rates will end up. It's unanimous that they are going to continue rising this year, and we expect several more rate rises to come. Even amongst the major lenders, including Commonwealth Bank, there is a differing view to how high the interest rates will go. The RBA obviously plays its cards reasonably close to its chest, because the numbers it's looking at are, of course, the inflation figures. It is, like most economists, hoping to rein in inflation as quickly as possible, and given that inflation remains high, we do expect a few more reasonably big bumps to the rates over the next few months.
For sure. The head of research at Macquarie actually came out saying central banks over the next sort of 10 to 20 years might be playing like a bit of a yo-yo kind of effect, where they rein in inflation and they realize they need to perhaps like cut rates again to stimulate the economy and things like that. Is that something you can see playing out in Australia? Australia is often like a bit of a laggard behind the US, for example, with all those key economic figures.
Yeah, we certainly, Australia's inflation, albeit significantly higher than the Reserve Bank would like, is much tamer than some other advanced economies. Certainly the US is the poster child for high inflation, and has made some even steeper rate rises than Australia. It's certainly good that Australia isn't suffering the same degree of inflation as some of its peers, and I do expect the Australian economy to weather the changes again slightly better in much the same way that in the GFC Australia did, comparatively better than many of its peers during that period. However, inflation is a concerning problem. The RBA continues to need to rein it in, and we'll be watching, like most consumers will be, and responding accordingly.
Sure. And pivoting more specifically to Unloan now, there's been a lot of talk in the media recently about becoming a mortgage prisoner, like with house prices falling and you might not be able to refinance in 6 to 12 months' time. Is that a sort of consideration for Unloan? Are customers coming to Unloan refinancing now to get a better deal and stay on top of those rate rises?
Absolutely. The earlier you get a great deal, the better. You really want to look at your home loan now. Always earlier the better. It's for two reasons. One is it's put the savings in your pocket now, and make and be with a product that isn't offering a honeymoon rate or a fixed rate that reverts to a higher interest rate. You really want to be on a persistently low rate product, ideally, like Unloan. And for the second reason is, apart from putting money back in your pocket sooner, is, as you said, the mortgage prisoner effect, where when serviceability is assessed, it's lenders, including Unloan, will assess the borrower's capacity to absorb future rate rises. Mm-hmm. So we're actually looking at your ability to pay the current rate plus a few percentage points. Now, the longer you leave that in a rising rate environment, there could be a position where increasing numbers of people are what we call mortgage prisoners, where they could comfortably service their current rates and would indeed save more money by switching to a cheaper rate, but can't, because when being assessed for that cheaper rate, the new lender has to also factor in the ability to pay at a much higher interest rate than today. And so they may not be able to service on that loan, consequently not be able to refinance and be stuck paying a higher rate product. This is what we call mortgage prisoners.
It's a tricky one for homeowners at the moment. Moving more specifically to Unloan now, it might be a good chance to promote Unloan. I've anecdotally seen that although some sort of challenger lenders or digital lenders might not have the lowest of the low rate, what they can offer is a great service and a really fast home loan approval time. Where does Unloan play into that? And what do you think about this maybe being the new sort of like battleground for mortgage lenders?
Look, it's definitely one of the factors that prevent more people from switching home loans is traditionally the pain involved. No one likes paperwork. No one likes waiting for a long period of time. So Unloan has been specifically built not only to offer a great rate and an increasing discount every year, but also a very fast and easy application process. So getting that great rate is not difficult at all. For us, the application process is one of those linchpins. We want to constantly work on making it faster and faster. It's already be completed in as little as 10 minutes and then is assessed by one of our lending specialists. Generally, most of those assessments are turned around between 1 and 3 days. So there's pretty fast approvals. Later this year, we're also going to be offering open banking, where customers can self-verify their assessment by simply connecting their bank accounts. And our system will automatically look at the transactions in their bank account, automatically assess their income, and provide instant approvals on the spot. So that's coming in October this year, and we're very excited to further streamline the application process and make it easier for more Australians to switch and put money back in their pockets.
That's amazing. Open banking, I think, will be really, really powerful. Are there any other sort of avenues for open banking that you can see Unloan participating in or benefiting from?
Yeah, I think the consumer data right regime, and open banking is the first of many industries that it's looking to tackle. That being, is connecting financial accounts and allowing mortgages to be completed more easily. The government is looking now at extending that what we call open banking, but it's actually the consumer data right, into other industries like telecommunications. And I also can imagine that open banking itself in finance will continue to get better and better and better. You'll see more lenders using it. And certainly in Unloan's case, we'll be making sure that we're on top of the latest innovations there to give our customers the fastest possible application and approval process.
Awesome. I think that wraps everything up from my end. Was there anything else you wanted to touch on, or anything else you wanted to mention, or whatever?
I think, look, our key message out to customers with a home loan is now there's never a better time, especially in a rising rate environment, to look at your position. It pays to have a look at your options. Unloan.com.au obviously is a great starting point for your research. And if you're looking to put money back in your pocket, this is probably one of the easiest ways, which is refinance your home loan. It's not off, and the average savings is in the tens of thousands of dollars over the life of the loan. There's not many things you can do in around 10 minutes that will put about tens of thousands of dollars back into your pocket. So have a serious look, do your research, and we hope that unloan.com.au might be right for you.